Hello guys, welcome to Go Capital. Please subscribe to this channel and click on the notification bell. Like this video if it appealed to you, if this is what you have been looking for. Today we are going to continue from where we stopped in the last class. And in the last class we are talking about the price pathway strategy, and it is actually something that is really simple. So today I'm not going to waste your time. I'm just going to dive into the strategy right away. So last week we said that when market moves, when price is moving, it follows a path, a pathway, a pattern, a style, a trend. Okay, and we said that there are three kinds of trend that we see majorly in the forex market. So there are three pathways that price follows. Number one is the upward trend or the upward pathway. Then number two is the sideways pathway or the sideways trend. Then number three is the downward trend or the downward pathway. So I'm going to use the upward trend to do the example of today. So if there is no more time, then I'm going to do the one of the downward trend in another video. But the rest, the process is the same. What happens in both is actually the same, just that it is the reverse of the order. Okay, so now let's run into this. When market is going to move, it will move from a particular point. Look at my cursor here. Let's say price began to move from here and it starts going up. When it starts going up, it will get to a particular price level. The price level is going to get to, it's not just any point it likes. It will be one of something that I will mention later on. So when it gets there, it will pause and then start coming back. When it comes back, it will not just come back to any point it likes. It will come back to a specific reference. There will be something it is coming to. So I'm going to explain all of that to you as well. So it will come to a particular level and then it will start going back up again in an upward trend. So whenever it gets to this point where you have it equal with the previous one, this particular point, it will pause a little. It will pause. Are you getting me? It will be doing like it wants to go down and go up. Why? That's the way the forex market is, because this particular level where price stopped before, when market get there again, it will want to stop. It will want to pause around that place. But if it's an upward trend, like a strong trend, it will break through it. Are you with me? It will break through it to a level, a higher high that is higher than this one. Okay, so when it comes to a higher high, it will start coming down again. The market will not just continue to go up forever. No, it will come down again. And when it is coming down, it's coming down to this same point, exactly this same point. That is where it is coming to. This is the strategy I'm talking about. It will come back to this same point. This is where it will come to. Now in this same point, there will be some kind of candlestick a pattern which I've mentioned before in our last video in this place. So in this area, there will be a kind of, it can be any of the ones I told you before. It will be in this place. So market will come back down to that same point. Now this same point that the market is going to come back to is what is known as the mitigation block. The mitigation block. Don't worry, I'm going to label it for you. So this is what we call the mitigation block. So market is going to come back to this same point, exactly the same point. Okay, and then when it gets here, it will pause. It will act like it wants to go down or not, but be rest assured that if it's an uptrend, it will not go down. It will go up from here again. So when it gets to this point, it will pause again. it will pause again, trying to break it or go down from here. It wants to go down from here or go up. So you will see market trying to range, trying to do one or two things here. It will slow down a bit. Okay, so then until it will finally break through this particular line, a price level. So once it breaks through again, market will come down again. Is a must. What I'm telling you now happens, of necessity. It must happen because that is the way price move. That's a pathway. Price has to be delivered in the market, completely. It has to be balanced. So all the levels has to be equal. Okay, so when market moved from this particular level initially and broke through it, there will be a lot of orders, a lot of pending orders in this place that the market has taken out. Okay, so that is why this place is very important. We'll call all of this zone here, this particular point here, we call it liquidity zone. Okay, so when market clears out the liquidity zone like this and breaks through it in an uptrend, it will come back to this same point again. Okay, exactly the same point. It must get back to this point again. So once it get back to that point, what will happen? You will see the reaction. Either it wants to break down below it or go up. But if it's a strong uptrend, it will go up again and get to this point and pause. Okay, now the same thing happens again. You see the market reacting, trying to push up and come down, push up and come down. Okay, so you see the market reacting, go up, come down like this, go up, come down, go up until you break through it again. Are you with me? So once it breaks through it again, it will get to another high and pause and start coming down again to this same point again. Okay, so that's how the market moves. It must come back to this point. So it's all these points that you look at. So these are the important points. When the market moved from here and broke this point and came here, what you do as a trader is, since you already know the market is going on an uptrend, because you have done your fundamental analysis before and you have known that yes, market is going up, when it breaks through this level and comes here, your own is to put a pending order in this level. You put a pending order here on a buy limit. Okay, because market will surely come down to that place and do what? And buy again. So once it broke, maybe you missed this one, you wait for it to go above this price level. Once it goes above it significantly, it will come down again to this level. This is where you place your buy limit. Now you don't have to wait for confirmation. You don't have to wait for a bullish engulfing or any other thing to buy. Your own is, the reason you need the bullish engulfing and the rest, or the bearish engulfing, is to know the key levels, because you will see those patterns at key levels. So you will see any of those price patterns I mentioned before in all these highs, in an uptrend. So you'll be waiting for market to come to those places, or you can simply just place a pending order, because when market comes, it will touch it and it must go up again if it's an uptrend. If you notice that it's a strong uptrend, I'm going to show this to you on the chart. Okay, don't panic yet. So then market will come back again. Well, you don't have to actually wait for it to come back. You just place a pending order, a buy limit on this level. So I'm going to show you how to put your stop loss on the chart. Okay, so not here particularly, it's on the chart. I'm going to show it to you. So the market will come here again, and once it comes here, it will pause again, trying to go down or up. Then what you will see, it will shoot up again with an uptrend. So once market breaks it again, the same process continues. Now what will now happen? If the market did not come back to this place but continues to buy, like it came to somewhere like this but not equal to this, then it bought and break it, the next thing you'll be looking at is this one. You will forget about this one. This one has passed. You'll be looking at this one, okay, for it to come back here. Are you with me? So that's what you do. No matter the situation that happens, that's what you do. So sometimes the market will not come back to this particular point. It will just come back to half of this one. You will miss that trade because your entry is going to be here. So if it does not come back to this entry, you have missed it. You keep waiting until you see this pattern form all this structure form. So this is the structure of an uptrend, like we said before, the structure of higher highs and higher lows. That's how an uptrend moves. Okay, that's how an uptrend moves. Now, what will signal to you that this trend is about to change is when market is going up and it gets here or below it, either below it or here, and it paused and refused to go up, but rather started coming down and came back to the same place, you know that something is about to happen. So at this point, you are no longer doing anything in the market. You are just waiting for it to come back and break these equal highs again, for you to break it up before you do anything. So if it does not break it, it will come here and come here, or sometimes it will just be below itself. But when you see that the thing is beginning to form equal highs or lows, just know that something is happening already. That's the time you now become patient. So it will happen that it will come below this one and come back to this one or to this one, any of them. If it comes back to this one or to this one, then just know that the trend has changed. Because if the market is going to come back, it's not going to just go straight like this. It's going to come back to this one here, like this, and start going down. Okay, and when it is going down, it will not just go down to any point it likes. It will come down to this one. There will be some reaction. Because it's an uptrend, you will be careful to see if it will, continue to sell or continue to buy. So, but you know that the trend has changed, being that it came here and started going down. So now that the trend has changed, and it has gotten back to this particular point, for you to join the sell, you will have to wait for it to get to this level. The market will always come back to the levels it has been to before. It does not just move anyhow. It will always come to the point it has gone to before. So it will get there, then it will now come back. This is where you place yourself. This is where you are rest assured that the trend has changed. This is where you place yourself, your sell limit. So the market will come here and goes down again. You will cash this one because you will cash it to the next level. That's how you keep doing it. This market that you think does not move in a straight line, like it does not move very cleanly like this, it does. It moves very cleanly like this on the chart, and I'm going to show it to you. So then it goes back up again to this level, which is the mitigation block, and then it continues to sell. This process happens throughout, every day, on any time it happens in different. But when now I'm coming, how do I move this thing now? Okay, let me just drop it here. Let me drop it here. Okay, so what I'm trying to say is this particular market that you are seeing now will only change. It will only change when it starts going up again, and it changes from this structure of lower highs, lower lows and lower high. That is sort of a downtrend. Once it goes back up and breaks any particular point, any particular price level, and goes above it, then know that the trend has changed again. But you will not just enter. So you wait for it to come back to this place before you enter the buy again. So this is how the market moves every day, day in, day out. The market does what? Moves like this. It will not change. These are the market moves. So now, what have I said so far? Now let's come back to these particular points that we have been. I want to mark the important points for you now. This level, okay? Yes. Then this level. This level. In an uptrend, that is the level that is very, very important to you. In an uptrend, that is what I call the mitigation block. Okay, that's what I call the mitigation block. The reason why it is like that is when market was moving from this point to this point, when market was moving like that, it got to a high and it started coming down. There were people who will sell at this point. It was coming down. It should not be somebody like you. because we've already understood how the market moves. So those people that sold here, they will be in profit. The market will now start going back up to stop all of them out at this point. Now, the big monies, the people that have big money that are actually moving this market, because you and I cannot move this market. The people that are actually moving this market, they will have orders in this place that they need to, that are you actually in loss before. Okay, so once market break, because before they move market down to stop people out, they will be in positions that are also in losses. So once market breaks through this place, they would like to come back, you know, to redeem all those losses. That's what you call mitigation. So the losses that they are recording here before, they will make sure they will come back and recover all of those losses. So by stopping other people out again, and by also taking profit. Now this is going to take me to a topic I don't want to venture into. You know, I want to make this course very simple. So let me forget about the use of the word mitigation block or other block, okay? But this is what I want to say. This particular area here is where you are going to find any of those candlestick patterns I talked about, which is, for the case of an uptrend, you are going to find any of the 4 or 6. Yeah. Okay, actually they're supposed to mention morning star and evening star. I did not mention it, so it's also very important. Money at this particular high, you will find what we call an evening star. You can go online and check what evening star is, a candlestick pattern that's evening star. You will see a lot of videos about a lot of content about it. So an evening star is going to be in this place, or an inverted hammer is going to be here, or a bearish engulfing is going to be here, or what should I want that I mentioned at that time? Those candlestick patterns I mentioned is going to be in this place. Okay, so that is it's at this point now you are waiting for the market to come back to. So you place your order at this level. Okay, when you place your order at that level, what will be your stop loss? I will show your stop loss to you in the chart, in the main chart, so that you will see how it works. I'm not going to really show you the case, because there are 2 cases. There is case 1 and case 2. Don't worry, I will show you the case 1 and case 2. So once market breaks through this place like this, it will come back. So this is where you place your buy limit. Okay, exactly on this high. That's where you place it. Let me see if I can bring it down small. Okay, so this is the point you place your entry exactly. So the market will either go into it a bit before buying, but remember to always put a stop loss. I will show you where to put your stop loss, because it's not every time you will be correct. But I'm telling you that this thing I'm showing to you is over 80% accurate. It happens in every chart, in any time frame, whether you're on the daily time frame, whether you're on the 1 minute, whether you're on the 1 hour. This is what happens every day. This is what happens every day. Now on this case, the market did not come back to it. I told you, you will miss this trade. You will not be on this one. You will miss it. Okay, so but it surely will come back again to another high. Are you with me? So this is how the market moves. This is the pathway. It moves like this, and I will show it to you, and you'll be amazed. You'll be shocked. You'll be like, really? Now this has nothing to do with double tops and double bottoms. It has nothing to do with a triangular pattern, channels. No, this is simply higher highs and higher lows. The market will move from a low to a high, and then create another low, and then it will go back and break the previous high it created. Once it breaks that high, allow the market to come back to this high it just broke. It will buy again. That's how an uptrend behaves. Okay, so this is case 1. What did I say? This is case 1. Don't worry about the downtrend. Well, or should I just do it? Okay, let me just talk about it small. Now these are the important points for a downtrend, and this point, these are the important points. In this place, we are going to see a bullish engulfing, or a morning star, or a hammer. Any of the price pattern that I mentioned before, you're going to be seeing it in all of these lows. So for a downtrend like this, what you'll be waiting for is for market to be coming back to these previous lows that are higher. Okay, so this is how the market will now sell. We sell from that place. This is happening. You don't have to be emotional about it. You don't have to be afraid. It happens every day. And remember that all of these levels here are going to be equal with the other ones that caused the buy. The levels from which it was buying is the same level to start selling from. Market will start reacting at those same levels. Okay, that's how the market moves. That's how the market will continue to move. Okay, that's how it is not going to change. This is how the market has been since all the chart has been like this. Now it's very simple. I come again, market moves from a low to a high and comes down again. This coming down is what you call a pullback or a retracement or a correction. So a correction, a pullback, it pulls back a little, then it goes up again, rallies up. Once it rallies up, it will pull back again to this place, to the previous high for an uptrend and continue to buy. This I just showed to you now is case 1, scenario 1. So let me start to label these charts. So let me say case 1. Are you with me? So let me make it really bold so you can see it. All right, so this is case 1. Are you with me now? So these are the blocks that are very, very important for an uptrend. All these blocks, very, very important. Okay, so these are the blocks you look at. You look at the highs, the high for an uptrend. You look at the highs. Okay, so for case 1, you look at the previous high for an uptrend. So let me write it here so you can see. Case 1, uptrend. Consider previous highs. So those are the points you look to enter the market. Okay, for case 1 now, you look at the previous highs. So you can take this screenshot because I'm going to do a case 2 now. So I'll just move this chart up a bit. Okay, so for the case 1, you are going to be looking at the highs. Once market break a high, it must come back to it for an uptrend. Okay, so let me try to see if I can edit this thing. I don't know if I can edit it. Let me try. I don't know. I'm not so used to trading view. Cool. So maybe I cannot. So I'll just, maybe I can, but I don't know how to do it. So I'll just take a new one. So then downtrend. You look at consider previous lows. Okay, that's what you look at for the case 1. There will be an uptrend case and a downtrend case for case 1. So like I just said, you consider all of these lows. Once market break this low downward, it must come back to it. How do you signal the change in trend? Market will start creating equal lows or equal highs. If it doesn't, it will just change from the structure of a higher low to a structure of a lower low. Once that happens, just know that this might likely change. Not every time, but this is often the case, but not every time. Okay, so this is case 1. Are you with me now? Very important. So all of these blocks, these are the important blocks, mitigation blocks. I said I will not use that word before, but let me just use it for the sake of label. Mitigation zone. Let me just use mitigation zone. So this is mitigation zone. Okay, mitigation what zone? Mitigation zone. So this is how it is. Mitigation zone. Are you with me now? So mitigation zone. In this case, let me change it to red. All right, mitigation zone. Possible change. Same. You see, this is what this zone represents. This particular zone, right? So that's what this zone represents. Okay, so that's what this zone represents. Are you with me now? So once you discover that this is what is happening from market at this high, it must come back to be mitigated and it goes up again. I don't want to use all those words because it's actually a bit complex for newbies, but I want to make strategy very simple. It breaks a high and comes back to that same high it broke before, and breaks it again and come back. And I told you that the things you are going to see that will create this zone for you, that for you to be interested in it, is those price patterns I mentioned. Morning star, evening star. So for an uptrend, you'll be looking for evening star, inverted hammer, bearish engulfing, and the other one I mentioned, I've forgotten the other one now. So just refer back to the previous video, you'll see what I'm talking about. Okay, so that's for case 1. All right, so now let's go for case 2. Case 2, I want to just copy and make everything fast. So for case 2, let me move this one down. All right, now for case 2, let me tell you what market will do. When the market moves from this low to this high and comes back, and then it breaks this high like this, case 2 is that this point, when it is coming back down, it may break this place and come back here. Okay, and come back there before going up. So same thing may happen here or not. It may come back to this point, or here, or here. So let's just say here. Okay, so it can decide to come back to this point or just stay here and continue. So the uptrend happens anyhow. So it can come back to the mitigation block or here. So these points I am showing to you, I'm going to give you a name for them as well. So this is the point that is important in this case. The lows, okay, is the low that is important in this case. The lows, they are important. Let me remove that one. Okay, so now, but actually there are two things here. So let me just leave them like this. Okay, so this is another case. This is case 2, and for the downtrend it can be the same as well. You can decide to come back up here to this place before it sells. Okay, then it can decide to do the same here. It depends. You just be watching the market. So if your case 1 fails, you'll be anticipating case 2. Are you with me? So that's why you use stop loss in trading, because not every time it's going to work. Are you with me? So now for case 1, market broke this point up and started coming down. Then you place a pending order here and it stopped you out. This is another place for you to enter the buy again, since you are sure that market is in an uptrend. But why? How? From your fundamental analysis, you've known that the market is bullish, is going to buy. So you are not just guessing it, you know already. So, and there will be other things you are looking for in these zones, things like what some traders call fair value gap or price imbalance. But you really don't need all of those big things to trade this strategy. The strategy is as simple as it is. You just look at where market is likely to go to. It's likely to go to a previous high or a previous low. That's where the market moves. So once it breaks a high, it will come back to the high it just broke. So if you come back to the high in this case and continues to go down, then it's going to come back to this low and buy. Are you with me? There will be something it is looking at in this place that it is coming to take before going back up. In this case now, what you will find in this place are bullish engulfing, morning star, hammer, and the other pattern I mentioned. Okay, so that's what you'll be looking for in this point, and market will go back up. So this is case 2. Let me just go and copy all of this. I don't know how to edit this thing now, so let me just write it. Let me write it. Case 2. Okay. Uptrend. Consider previous lows. No. Okay, consider previous low. Then downtrend. Consider previous highs. So this will be case 2. Are you with me now? So what have I said so far? Market moves to a point, and it comes down, it retraces and rallies again. Once it does so, it must come back to this point. And that's in case 1. But if it breaks it and is coming down to this point, which is case 2, before buying again. So the important points you look at in the market is this point and this point, this point and this point, this point and this point. And if market is going to come back down again, it will follow the same price levels. It will keep reacting at the same previous levels that it reacted when it was going up. Okay, so now let me just take the next few minutes and show you what I'm talking about now in a live chart, in a chart. Okay, let me use the chart. Let me use Nasdaq or S&P 500 chart, so that SPS 500 SPS 500. Which of the broker? Let me use Rwanda. Okay, all right. So I would like to go to a small time frame. Let me just go to 5 minutes or 15 minutes. Should I go to 5 minutes? Okay, let's say 5 minutes. Oh wow, why is it like this? Okay, so I'm looking. All right, now let's consider this case of a downtrend. I did not plan all of this before. It's live. I'm doing this. I'm not, what I mean is, I did not have the chart I'm going to use in my mind before coming to this class. You get? So I can use any other chart too, which of course I will still do, so that you see that it happens in every place. Now look at the market. The market was going up since then. All of a sudden, it broke this particular low it created before. These are an equal low, like I said in that chart when I was drawing it in the example, in the explanation. So it breaks this low downward. When it broke it, it has to come back up to it again. Are you seeing it? It has to come back. Now this coming back does not have to be many candles. It can be only one candle. It has to come back to it. What did you see in this place? Bullish engulfing. Are you seeing it? Bullish engulfing. This is the mitigation block. So what you are going to look for, what you are going to be doing as a trader, is to mark the whole of this block. Is to mark it down, because market will come back to it before selling again. Are you with me? So, and the same market, when it came down again, broke this low now, okay, when it went back up, it started coming down again, meaning it has broken this low it just newly created. It went back again into that same block before selling. Okay, sold again. And if I show you, I don't know if I can go back, I don't want to make you see too many data, but the thing is, all of this reaction is reacting at another zone before. So then it keeps coming down and goes back up. Okay, it didn't get to this point. This particular point is also, and it's a level, is also a low. If I switch this to a 1 minute time frame, you are going to see that this blue candle is a series of 5 different 1 minute candles, because this is a 5 minute chart. So this single blue candle you are seeing here is a series of 1 minute candlesticks going up. So this is also a level in the market. So, but it did not get to it. It got to this one, broke it and failed and started coming down. Now when market broke this one that is here, when it broke this important low, what happened? It broke it down. Let me mark it. This is the tweezer bottom. Are you with me? This is what the tweezer bottom. When market broke it down, what happened? Came back into it again, onto it before selling. Remember, your stop loss is always going to be the full block, the full pattern. You mark the full pattern, okay, from both the wicks and the body. That's how you know your entry and your stop loss. So your entry is going to be the beginning of the wick, your stop loss is going to be the ending of the wick. So you mark the whole of the price pattern. The price pattern in this case is what? Is a tweezer bottom. Case 2 would have been that you mark the whole of this one. That would have been case 2. Okay, that would have been case 2, meaning the market can break this one and fail and come back to this place. So here will be your entry and here will be your stop loss for a case 2 to sell. But the case 1 head, market went down. So then here will be another entry. Market did not come back to it before selling. So you keep waiting until you see what we have been talking about, until you see it. All right, so that's how the market moves every day, every time. This is a 5 minutes time frame for the S&P 500. I want to look for a good trending market. Okay, now let's go for an uptrend in this case. Now market has been trending up from what you know, and it kept creating levels, and it created this particular one here. This is a bearish engulfing. Okay, this becomes an important point in the market because this is a high that was broken. This is a high that this move broke. Okay, broke it up. So you expect market to come back to here, here, or here. 3 levels. Okay, 3 levels, any of them can hold. Now market came back to this first one and pushed up again, came back to the second one and pushed up a little. So this becomes a short-term structure of a downtrend. So this 5 minutes, you cannot use 5 minutes to establish trends. You know trends from a bigger time frame, but you know already that this is an uptrend. So you don't come here to start looking for sell setups yet. So the market now came back to this. It didn't really get to it, so maybe you would have missed this one. Okay, you would have missed this one. Now what's the next thing that happened? Market broke this one up, broke this particular one up. And what are you seeing there? A bearish. Okay, this particular pattern is what you call a harami, bearish harami. I did not add it. It's also a very important candlestick pattern. Market came back to it. Are you seeing it? Came back to it here. So you put your pending order in this place. Market came back to it and bought. So you would have caught this one. Why? You know that the market is in a strong uptrend. So you saw that it broke this high. You placed your entry here. You are waiting for it. It did not get to it. Don't panic. The market is always there to always create the same thing again. So what happened is it broke this high up. What you are waiting for is for it to come back to it. It does not matter any section, whether it is Asian session, whether it is New York session, whether it is London session. This thing happens any time of the day. You only just to mark the chart. Okay, so you would have caught this big move like this, and this is how I used to cash 1:4, 1:5, 1:11. Because if you look at this box, if here is your entry, this area is your entry, and here is your stop loss. And imagine from here to this place is almost times 4 times 5 of this place. I get in, that's how I get times 3 times 4 times 5 of my risk. It will not win every time, but it happens a lot. So you will see market, either it will break this one down and come back to this place again and buy, since it's an uptrend. All right, so then the market now started creating some kind of patterns. It's no longer creating a higher high. You know something is about to happen. It's no longer creating a higher high. Then maybe because of your fundamental analysis, you found that market is about to start selling. And what you now do is you look for this level here or here. These are the case 1 and case 2. This is case 1, this is case 2. For here, this is a bullish Aramic. Okay, why for case 2, this is what you look at. Are you with me now? So market just came back to it and started going down. Are you with me? So but you don't need to be selling an uptrend though. You've already known that the market is going up. So whether you are seeing the bearish pattern in an uptrend that you now want to sell, no, don't do that. What you do as a trader is you have a set of rules that guides your trading. I will do that in the master class. Okay, so that rule is what you follow. The market will come back to retest a previous high or a low and continue the buy trend. That is what you'll be doing in an uptrend. Why for a downtrend like we did here, it will come back to a high or a previous high or a previous low. Then you do what? You sell. That's what you do in the market. So this is for Nasdaq. I just use this to show you something. Now let me show you another kind of asset. Let's say let me use which asset will I use now? Okay, let's use CHF JPY. All right, so let's use CHF JPY. Let's use CHF JPY. You know, this market is a trendy market. Let me change the time frame so I can have data to be a bit reduced. Okay, markets have been trending up in this. I told you that JPY has been weak. Okay, so meaning it will be buying. Now let's look at this. For example, the market moved from here heavily, broke this particular high. Okay, with force. What you do as a trader is to wait for market to come back to this point. So this is where you place your entry. That's where you place your entry. Okay, that's what you would do. So you didn't get to it, but if I was the one trading live, I would have used this one instead of this other one. I would have used this particular block. This particular one, because there are how many highs in that place? 1, 2, 3. So there are many points you could have come to. So this is the first one that is, most that's higher than this one, but this is the most recent one. So you can either use the most recent one or this particular one. So if it was this one you were using, you would have caught this move with very little risk. Okay, you would have caught what? This move. This is what we call an evening star. This pattern you are seeing is the evening star. So we have caught this big move. Now when it broke these highs again, what market will do is to come back to the high it just broke. That's what market will do. So, and I would have marked this point like this. Okay, that's what the market will do. It will come back to this level before buying. You can see that it just touched it and started buying. Just touched it and started buying. So this particular market now will continue buying. So what will happen here is market will come back to this point. Are you with me? It will come back to this point before buying. If it doesn't, it will break this point up and come back to this point and continue buying. So that's what the market will do. If it does not come back to this point, then it will break this one up, come back to this point it just created and continue to buy. So you don't predict it, you just follow it. You are waiting for it to come back here, and this is also another point it can come back to. Okay, these are important points it can come back to before buying. So, but if I want to be very conservative, I'm going to wait for this particular one, because this is the most recent one, and there are 2 blocks involved in this case. This case 1, this is a block, this is a block. This block has a name, it's called an order block, okay? But you don't need to know about all of those. I want to just make this strategy very simple for you. Market will come back to this place and buy again. If it doesn't come back to all this place but just continues to buy, then the highs is just created here to come back to retest it. What will happen should this market move from here up straight? It's when it gets here, you will see some reactions. It will want to try to go down. Those who are double top traders, that's what they will do, but we don't trade all those things. So it will break it, because the market is in a strong uptrend. Once it breaks it, it will come back to this level again. And what is in that level that it is coming back to? It's coming to these 2 is at top. That's where it's coming to. Once it comes to it, it will continue to buy again. Are you with me now? So that is how the market move, whether in an uptrend or in a downtrend. So I'm going to do another video another time to explain, other key things you must be paying attention to, and I'll also be doing live sessions. This is the whole strategy. The strategy is actually done. Like, I've finished the strategy. Market moves from highs to lows, from highs to lows, from highs to lows, and it will continue to be that way for reasons I don't want to go into, because it will make the course too broad for you. Okay, so right now just understand that market moves from highs to lows, from highs to lows, from highs to lows. So once it breaks an important low, where you will see all these price patterns available, it will come back to that same point before continuing the original trend. Are you with me now? So you don't have to panic. You can just set a pending order here for a buy. And remember, you don't have to set a buy stop. The market will just break through and continue to buy. No, you only to allow it break it first. When you finish breaking it, then it will come back down. This is where you start the buy. You are not the one that will force the market to break through. Let it break through first, then come back to this same place before buying. This strategy works every day, every time, in any time frame. I will keep showing you charts from time to time when I'll be doing analysis, live sessions. You'll see how the market will be respecting what I'll be talking about. If you check, the reason why this market is trying to react from this point and looks like it's trying to go down is because of this point. It's because of this tweezer bottom. That's the reason why it has paused in this level. So it has paused, going back and forth, creating like a range, just going back and forth. But we know that the market is in a strong uptrend, so we are not going to sell from here. We are not selling. We can't sell this market, because fundamentally our analysis has said that market is going to buy. So we are not waiting for a sell. We are not going to force ourselves to sell at this level. What we are waiting for is for market to either break through and we buy, or it comes to this level and we buy, because the market fundamentally is on a strong buy. I hope you get that part. I hope you understand it. So this is simply the strategy I'll be talking about, the price pathway. I'll keep doing more videos for you to understand, but technically I have finished the technical analysis part of this strategy. Are you with me? So in our next class I'll be talking about the sentimental analysis, and then we can now go into the master class where we'll talk about traders psychology. All right, with this I've come to the end of this lesson. Please, if you like this content, subscribe. Please subscribe. I'm begging you, subscribe. It will help the channel. It will help other traders like you to see it. Like the video, okay, so that more people can see it. All right, with this we've come to the end of the course. See you next class.